What's going on here or what? Oh, Jacob Wilson went yard. My MVP, this guy. What do I gotta do here? Hold on. What's up, Mr. Mario? How's everything looking? Good? We're broadcasting? Yeah. All right, everything's good here. Let's shut this off now. We don't need this shit. Avgo, a little bit of weakness. All right, hold on. Let me post a bunch of this shit. What is this? 1, 2, oop. This. 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 Let me just a couple of these things. Oh, back-to-back home runs. My fantasy baseball team is rolling over here. Hold on a second. I'm posting a couple of this I wanted to post. What else was it? This. What else? This. I'm coming, guys. I'm coming. Hold on. And what else? Oh, I wanted to show you guys one more thing. Hold on. Okay. And now where's the other thing here? Hold on. Is it here? What is this? No, that's not it. All right, I can dig it up after. Hold on. How's everybody doing? Like we got Greeks all over the place. We have Papoose, we have Stavros, we have the Greeks are taking over. 1, 2, 3. The Greeks are taking over the webinar. I gotta save this shit so I don't have to keep doing it. What else is there? This and this. All right. I'm coming. Hold on. That's not it, is it? Nope. This is it. Hold on 1 second, guys. All right, let me X this out. All right, I just wanted to give you an update, even Steam Room members, on kind of where everything's at midweek, or, well, more towards the end of the week into the NFP tomorrow. So pretty much, what did I do? I did something wrong? No. Pretty much the same, kind of the same topic and stuff we covered last week. Just give you an update on where things stand. I wanted this, and the other one, where is it? Here it is. Just crop out these charts. Okay. Okay.
Axios reporting that Israel has assured the U.S. it won't strike Iran unless talks fail.
Let me mute that guy. How's everybody doing? Hi, Sanka. Sanka. How's everybody doing? Let me start with this first. And you guys probably know kind of where I stand regarding it, but just in case people want to bring it up and wondering why I have no interest, let's talk about Tesla and get it out of the way, okay? Because you guys obviously know I don't enjoy talking about it, and just let me start with this though. It's the epitome of why I don't like to own names like this, okay? Because they become they cult plays in either both directions, right? We've seen it Tesla on the way up, we see Tesla on the way down, and they're fantastic trades. Like I saw quite a few people today in the Steam Room play the downside, right? If you do play the downside via puts intraday, all you have to do was get in the middle of that, even for scalp, and you would have found success. So I totally get it. But the last thing you want to do, and I said the same thing on the bullish side earlier this year when everybody went from extreme bearish to extreme bullish in Tesla because Trump won and Musk was in and nothing could go wrong. Okay. You don't want to let that short-term bias, right, from a trade turn into some bigger picture thesis and hang your hat on that. Right? You don't want to develop a bias to where you become stubborn and now you fall in love in either direction based on that thesis of a short-term trade, right? And here's what I mean by that. On the way up, okay? Again, same thing. Tons of momentum, tons of sweeper activity, fantastic trades for many of you guys, okay? But as the stock already ripped and went to highs, okay, more and more people became bullish. right? They're skittish, obviously, when the stock is not working out. When there's upward momentum, especially with all the news behind it, they become more bullish. But you started to see more and more of players out there hang their hat on the thesis that, oh, Trump is in office now, Musk is buddy buddy with him, and that should reap the benefits in the future, right? Because Trump will hook up Musk along the way, and the future is Tesla, blah 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 blah. All right, you see how that unfolded here, right? And again, no one knows when it's going to unfold, right? That's obviously the tougher question, but I think that the reasoning in getting into that trade, you had no business developing a longer term investment thesis off of that, especially when the trade becomes as crowded as it was, right? So, and I take the easy way out, right? Where I just don't like to get involved. Okay, so you could call me a sissy Mary, wussy, whatever you want to call me these days. Well, but that's kind of when there's so many hands involved, right? When there's so many hands in the cookie jar, it becomes a messy situation. So now you have where, again, that quote unquote bromance came to an explosion today, and you could see how this bearish thesis can build here, right? And it makes total sense. I don't understand the logic in picking a fight with the president. I don't care who he is and how much you like him or hate him, but that doesn't make any logical sense to me, right? Because obviously he has a lot of power, and saying some of the things he said. But I'm sure some of these perma bears are eventually going to hang their hat on this bearish thesis, and at some point in the future get run over, right? I think you have to steer clear from this. I think, right, and I said this when the stock was going higher. It's just you have too much going on there, right? You're not going to find an edge, or you're not going to figure something out in Tesla that some of the smarter minds out there haven't already figured it out, right? There are others who have access to a lot more information sources that have know a hell of a lot more than we do regarding the actual company and some of the future developments. You're not going to handicap that Tesla situation and try and get a clear picture of what the future may look like. It's extremely difficult, right? When you have when you have a crowded name like that, it becomes a problem, right? The stock now is political in a sense. It's no longer Tesla the business, right? And even the business wasn't doing that great, and the stock still had a bid because the politics were going its way, right? And now it's kind of the opposite. So that's all I wanted to share with you guys. You could talk amongst yourselves regarding Tesla and Musk. I'm going to hear enough of it from everywhere else that I'd rather not talk about it with you guys. I'd rather talk about the actual market and some of the signals we pay attention to. Now, in regards to the overall market and an effect that it can have, I think we saw a little bit of it today. It's a crowded name, right? A lot of chasers, a lot of funds that needed exposure. They needed to own Tesla, right? Based on performance chasing. Okay. So if the name continues to sell aggressively, it can weigh on the indexes because whoever these funds and players are that own Tesla probably own some of the more popular names that are heavily weighted in the indexes. Okay. So it is possible that it has some sort of shorter term effect on everything else where common sense kind of, says it shouldn't. But again, I'm going to go back to the point that I think that ends up being a good thing, right? If you're obviously not rooting for Tesla, but it becomes a good thing for the overall market and sentiment and positioning because it keeps a lot of the things we get concerned about in check, right? Kind of what we were talking about the last few weeks with tariffs, right? You don't want to get to that finish line just yet on the tariff side, because that almost works as an all clear, everybody get in, and eventually becomes a sell event more than anything else. All right, so to climb a wall of worry, and I think this Tesla, if it continues to sell, who knows? Maybe they kiss and make up after today. While it can have a short term effect on the big names and some of the basket of names that they buy alongside Tesla, right? And that's what we've seen a lot of basket trading out there. So something definitely to keep an eye on. Okay. So let's talk big picture. Just again, kind of continuing, I should say, where we left off last week and coming into this week. Okay. There were a few things out there. There's some things out there that we're kind of losing on the positioning side, right? We talked about the systematic funds, CTAs, and stuff like that. Hedge funds needing to chase. We're the process of losing that has already begun. Okay, we saw CTAs flip from short to long. Okay, hedge funds short, they started getting long, so that whole process has started. Coming into the week, some of these signs on the positioning end that we were seeing, a lot of times you get some short-term resistance and sell that shows up only because of how aggressive they've chased of late. Okay, so let me show you what I mean by that. All right, instead of running my mouth and then going one by one. Okay, so like hedge funds, for example. Okay, this is what some of the shorter term in hedge funds look like according to Goldman Prime coming into this week. Blue being the last week, black being the last month trading days. Okay, now into the lows, right? You can imagine, and we've looked at it, what this looked like. All right, there was literally no long exposure, no interest on the long side, especially in any risk-on sectors, into the lows of the correction. Okay, so that has flipped. Now again, this is short term, right? It's only a week and a month. Okay, but it's showing that that chase that a lot of people have started to talk about more recent here. You're starting to hear more people, especially on social media, talk about it. It has already started. It's already underway. Okay. And I think coming into the week, we were at a point where when some of these things get a little too aggressive on the buy side now, on a short-term basis, you can run into some stickiness. Okay. We haven't really yet in the indexes. All right. So the same thing may apply going into next week. Again, it doesn't mean the rally's over. Doesn't mean it's the start of a new bear market. Right? That's not what I'm referring to. I'm referring to aggressive short-term chase that a lot of times you see buyers almost get exhausted on a short-term basis. Here's another measure of it that you can see in tech. Okay, weekly notional long flow, and last week was kind of that buy capitulation on a short-term basis. Okay, now the reason I keep stressing the short-term basis, as far as a big picture is concerned, right? How are these funds positioned overall, not just on these short-term time frames? They are still, right, in most places, still dramatically underexposed, significantly underexposed, right? They remain crowded in certain spots. You see where they get long, right? You see where they get long when they're forced to buy. And that's been the trend for a while now, okay? But big picture wise, the fund positioning is still in good shape. And as we were talking about the last couple of weeks, that's something we don't want to lose, right? If we melt up from here, right? So if we see a continuation of what we've been seeing in this price action, which is kind of a slow melt, if it picks up speed and you get these guys to really start capitulating on the buy side, that's when you're going to see all these things explode. And then you're going to get to eventually some major extremes on that front. That's the last thing we want, right? That's what we want to completely avoid. What we want to see is every time something like this shows up, you get a little bit of selling, you get a little bit of volatility, you get some chop, right? You find some resistance where they've been quick to flip, right? Where they're forced to buy, and then a little volatility with some news enters the picture, and now what do? They start adding shorts back on, as opposed to getting more aggressive on the long side. So we want that trend to continue. Okay, and a good sign was this on that sentiment trader indicator we look at for hedge fund exposure. Okay, remember this is where they were coming into the week, a little bit above that red line. What you don't want to see is this accelerate from here, which tells us that now they're really chasing stuff, right? And what we've seen now is, to close out the week, basically, they've sped up the little bit of long exposure they already put back on, right? So they're back to hugging that zero line, which they've done a lot of. Okay, so that's a really good sign if you're a bull at heart and you're looking for some sort of bull trend out of this, from the lows that we've seen. Okay, so that's kind of what I'm getting at with that. So short term, again, some selling could be a possibility, but any material sell will likely set up a really, really nice entry more than anything else. Okay, here are the CTAs, which we talked a lot about. Okay, not so much the last week or two, really, because these CTAs were max short. A lot of buying needed to be done, right? Not only to cover those shorts, to get long. Okay, so now they reached the point here where they've kind of exhausted themselves as well. Okay, you really need some upside levels to crack on the S&P 500. You really need the VIX to bleed out for these funds to start to get more aggressive on the buy side. Okay, what usually happens when they're slightly net long, right? They got some long exposure on right now. You get more of this, where you get it from going from buy flow in all tapes. In other words, they were buyers in flat market, up market, and down market. You start to see things diverge from each other, right? So the S&P 500 and the NASDAQ, now they're sellers in most tapes, but the Russell, because it's a laggard, they still have some buying to do there. Okay? But I think the main takeaway is that tailwind, and it was a big one, the amount of buying that they needed to do if this market flipped off the lows has already taken place. Okay? So now, again, it's almost as silly as it may sound, what you're rooting for here, you wouldn't mind them getting short again. Okay? It wouldn't take a whole lot for them to get short again. All right? So that would be ideal. Again, keeping these funds dipping their beak on the short side ultimately keeps a floor in the market. And then when that macro, whenever it does flip, right, you get the Fed cutting rates or whatever it will take, that's when you get that big final real chase that can set some fireworks off. Okay? But the climb a wall of worry gives lasting power, gives long life to cycles. All right? So those were the two main things on the fun side there. Here's a negative, and it's been negative, but we've been seeing it in the flow, and we've seen it in a lot of different things. The quote unquote smarter money, institutional, sharper money out there. Okay. These days, again, smart money, take it with a grain of salt, but more on the pro side that, really utilize leverage when they get bullish. They know how to step on the gas, right? When they have some conviction. They never did into this whole rally, right? So these are the SPX, the funding spreads, which kind of measure that. And, a lot of times when they're ready, like you had a correction, it did its job, and they're ready to put risk back on, you'll see this measure snap back in a really meaningful way. So it hasn't. Okay. Now, is that bearish? Yes and no to me. Yes, because you want these guys, you want this crew to be on the long side, right? Because that, I think, increases the odds, a higher probability of potentially a new bull market, new bull trend that may come out of this, right? A lot of times when you don't see the backing from that crowd, it's more of kind of what we're seeing. We've seen up to this point forced buying more than anything else, right? So it's the institutional money not buying because they have conviction 9 months, a year out, right? They're building positions, buying based on chasing performance and because they have no exposure on, right? So this is, for me, this is kind of what it tells me, my takeaway more than anything else. Now, again, I know some people, and I think even Goldman, they put it in the caution category, right? Because they don't feel the rally has been real up to this point. But that doesn't mean that they won't feel that way a couple of weeks from now, right? Or if the Fed cuts rates, right? So these things are subject to change. And I think we're seeing kind of what they're showing us off this signal. We're seeing it in the flow and the price action. We're seeing, that's been the takeaway, right? Like right now, we're seeing a lot of the more speculative, heavily shorted names. They've been in focus, right? So unless you think that institutions are making big bets based on Peloton being a huge factor in the future and zero revenue quantum names, right? It's more of squeezing and chasing performance, right? They get a bigger bang for their buck in some of these things. So that's what we've been seeing in the flow up to this point. It's created a lot of momentum, some nice momentum in these names, but there's not a lot of fundamentals behind these names. We've talked about it. So a lot of these institutions aren't going to build positions in these things. They just use them. Again, some of them are short these names, need to hedge, and some of them are looking to roll the dice here because they can catch up in a more meaningful way. All right, so that's kind of the takeaway from this. Where there are other things besides the flow that we're seeing in this camp too, right? You could say Sharpies and stuff like that, which I'll go to right now. Hold on. Here are Sharpies. Is it Sharpies? Yeah. So same thing, Sharpies, right? We've talked about this the last couple of weeks. These are commercial hedges in the futures market. They've covered their entire short position, okay, which is bullish, even into the rally, which is, I think, even more of a positive sign, okay? Because a lot of times they'll cover shorts and then the market rallies and they'll slap those hedges back on, all right? But they haven't got aggressively long yet, okay? And this is what that looks like in the S&P 500, okay? So again, they covered their shorts, but kind of like what went on the summer of 22 into the fall of 22, the lows, they not only covered shorts, they pretty much got max long, which is very rare for them. Okay? And obviously that tells you a lot about the conviction based on positioning, more so than anything else. Okay? What this tells you, when they're positioned like that, this tells you nobody but Sharpies, nobody but hedgers think that we're near a bottom. That's basically what they're telling you with that type of positioning. Okay? So again, positive, right? No hedges back on. At the same time, you don't want to see the continuation of a melt up because what's likely to happen, we're already starting to see a little of it last week. They're going to slap hedges back on, right? The more bulls that get reeled in, the more they get aggressive on the hedging side. Okay? And that's not the end all be all for the market. It's not like, as you can see on this chart, it's not like when they get aggressive and hedge, the market tops out that minute, okay? But it's a warning signal, right? Because again, it's telling you a lot about positioning and what's taking place there. So you see, like kind of here, in 2018, the market continued higher for another month or so, but then you had to deal with a pretty vicious corrective phase there, right? And this one was a little better timed in that sense, but it still was a couple of months because I remember being in cash from the summer in 2022 and 2021 before the market kind of ran out of gas. All right, and here too, right? Same thing here too. They kind of dipped their beak, being decently hedged twice before the market topped out. So we don't want to see that, right? Ideally, what you would want to see is some sort of digestion. If the market wants to pull a little bit, let it pull a little bit. But what's likely to happen as that pullback reels in bears, these guys are going to step on the gas and get aggressively long. Okay? So that's what we want to see on that front. And some of the short-term measures too were a little heated for obvious reasons. All right, market has come a long way. A lot of the more speculative names have participated in late. You get obviously sentiment people get a little more excited. So we've seen some of these short-term measures get a little elevated. All right, so this is the short-term sentiment comp we look at. Got up as over 70. Then you kind of had a little rinse when we had a little bit of congestion, and then you kind of got back to the 60 mark coming into today. All right. So again, signals that are giving us a heads up that things may get should get, I think is the better way to put it, a little tired here, and that would be a good thing. That wouldn't be a bad thing. That would be a good thing if they do. All right. I mean, to me, it's more of a bad thing if they ignore this stuff and continue higher. To me, that's a negative. All right. So some of the positive stuff that still exists out there is kind of what I mentioned, right? It's some of the bigger picture stuff, like funds still being significantly underexposed in a lot of different sectors. You have this vol panic index, right, which is kind of as a sentiment measure on VIX in a sense. You still fairly elevated there, right? Like you've seen a lot of times when the market squeezes to the effect we had just seen, you'll see a complete unwind where this thing can go to zero, right? It's still hanging around that $7 to $8 level because of all the fireworks that Trump and everything else he brings, right? So again, that's good. Risk appetite, we haven't really seen that big explosion that you see in a final top. So you want to avoid that, right? We've seen a nice rinse into the corrective lows. It's been bouncing higher ever since, but kind of got stuck here in this range, middle of the range here. All right. So a lot of the things, here's the Goldman sentiment positioning indicator. Okay. Right. Still in decent shape. Right. And what makes this a positive is kind of what I just mentioned. If you do get some selling, right? If you do get some selling just because the market's overdone on a short-term basis and a little negative news enters the mix, it doesn't take a whole lot for these things to become favorable again, right? And they're not magic indicators that someone concocted on TradingView. These things are measuring actual positioning in the market, right? So that's why they're important to pay attention to. But that's the main takeaway of why these things are still in good shape, because a little bit of weakness, a little bit of selling, and a little bit of negativity, you'll have these things in flashing bullish signals again, and that's going to set up another solid risk-reward entry, right? Probably the first one since we actually have come off the lows. What else I got here on here? Oh, I got a few other things I wanted to show you guys. We looked at Sharpies here. What's this? Oh, these are small speculators, right? So you got commercial hedgers, you got small specs, not hedge funds. We refer to them as the riffraff. And you can see they wiped out that long exposure. That got a little out of control there. All right. So ideally, we don't want to see this start to work its way higher again. All right. That's the last thing we want to see. And if you do get a little bit of around the weakness here, or even just chop with some volatility, and with Trump on a day-to-day basis, I mean, this with Musk today, who knows what tomorrow brings? That alone can create some of this positioning stuff to be exaggerated in that other direction. And last but not least, I got a couple things here. Is this credit default swaps? Yeah. You got the credit markets initially weren't really signaling much, but now to me you got credit markets and liquidity that I've been singing. We kind of talked about this the last couple of weeks. They're singing a different tune. Now, I don't want to get in the noise of the reason why, okay? Because it's above my pay grade. I'm not afraid to admit it. I told you guys, I follow a couple of guys that know a lot more about liquidity and this stuff than I do. I'm not scared to admit it. I just, I'll find who knows it more efficiently than I do, and I trust their judgment on things. But we're seeing things go on the liquidity front and the credit front very similar to what we started seeing coming off the 22 lows. Okay, you're seeing liquidity measures still really strong. You're seeing credit default swaps, credit spreads have tightened up in a meaningful way. Now, as far as I know, the economy, yes, has been resilient, but there hasn't been some major improvement on the macro front, right? The Fed, from what I hear from Powell, is still gun ho on not cutting rates. Maybe the job number tomorrow changes that picture, but who the hell knows? So what I'm getting at is there hasn't been any meaningful shift that we're aware of to create this. But at the same time, we saw that in 2023, where Yellen was doing her thing behind the scenes, and kind of the Treasury was pulling more strings than the FOMC, right? So a lot of times, I think we get caught up in trying to hear the word QE, and like that's where everyone's going to jump and get long, and the market's going to rip. I think like they're a little smarter than that, right? They know that word has meaning, and kind of like a lot of people who are in that crowd labeled it in 2023, it was not QE, right? Some bank facility bailout plan and whatever else was pumping the daylights out of liquidity. So you're seeing signs of that again, okay? And I think that's why kind of this stuff got a little wonky over the last couple of weeks. More on the speculative side, Bitcoin caught fire. I think Bitcoin's a really interesting follow here now, especially because, and we were talking about this the last couple of days in the room, if Bitcoin rolls over, that could be tipping us off to a change on that development, right? The liquidity front. So it always sniffs it out. It's always the first to sniff it out. Right? It did so again here in the rally. So that's something I think, especially with some of the bit larger money not really participating yet, and some of the more speculative stuff coming to life here recently, I think this stuff is worth paying attention to. Because it's kind of the lifeblood right now to momentum, right? In other words, to see this speculative risk appetite out there, you need that liquidity backdrop to be favorable, right? I mean, we had proof in 2022 when it wasn't favorable, these names couldn't catch a bid. They were dead, right? Dead. No matter what they did, no matter how great of a story they had, nobody had an interest in any of this speculative stuff. So it's going to be an interesting thing to follow over throughout the summer here, throughout the summer. And maybe it's something that just goes quiet for the rest of the summer. Certainly possible, but that could also mean, risk assets and maybe some of the more speculative stuff go quiet as well. So I think it's worth paying attention to, right? Here's kind of financial conditions. So I really moshed it up here so you can see kind of in prior cycles. Here was the 2023, what I was just referring to. Right, stands out like a sore thumb there, right? The difference, and you can see here, pretty aggressive move in financial conditions. All right, so if liquidity, if Bitcoin rolls over, if Bitcoin sells and kind of breaks that trend in the sense that we've been seeing, that could be tipping us off to possibly some tighter financial conditions and liquidity ahead. Okay, so I think worth watching, and you guys know I'm not the biggest Bitcoin fan, so, but I definitely think it's worth watching here. And what else? There was and you got these some of these liquidity measures, right? M2, a couple of guys we follow have the M2 with the leg, the correlation to Bitcoin psychotic, by the way. But we're kind of, I think, right here, if I'm not mistaken, here or here. So there's like a little bit of a pause, and then this thing kind of continues to shoot higher for the next few months. So if this is any predictor of what liquidity and Bitcoin may end up doing, obviously there's a lot more upside to be had. Okay, all I know is, again, the correlation with Bitcoin is pretty nuts. You guys probably seen it with M2 and that lag. What is it? 6 month, 3 month lag, something like that. So it's pretty crazy. Okay. So again, I don't want to get too wonky on this webinar, but for what we're seeing, I think for the type of market and rally we've seen from this point so far, that's kind of the lifeline, the lifeblood of the type of price action and momentum we've been seeing. Okay, because we're not seeing that institutional money step in. We're not seeing that institutional money step in and building positions in the flow in newer setups, newer names, right? Like even some of the cyclical stuff overall is still really, really dead. There's just not much of an interest, especially of late. Like you have, if you're not in AI, nukes, right? Any of those sexy stories, there's no continuation to upside in these things. They're just dead. They're just dead. Now we're seeing isolated flow in a few of them. And the flow is not really that good looking. It's out of the money buying with time. And what that tells me is, like, players' funds are positioning in a few of these things to have exposure just in case things get away from them, right? Because if these tariffs, if this whole tariff thing comes to an end, very similar to like the first go around, these cyclicals probably catch a real nice bid, right? These things, even before that, they should catch a bid. So I think we're starting to see some buying in names like CSX, right, which is a leader, those type names. But down the food chain in cyclicals, it's just really, really dead, really dead. So I think until we start to see some movement there, at the least, what we're seeing now is just momentum based. It's just momentum based, right? And liquidity a lot of times is a big, important component of that. What else do I got here? And then something else I've been paying attention to. You guys know, especially on a shorter term basis, I pay attention to it. Especially where you're in a spot here where you're concerned the market may melt up, You're hoping it don't, right? I think Vivix is something worth keeping an eye on, right? Because what we have a tendency of seeing is when things get a little, there's too much of a frenzy out there starting to develop, you start to see Vivix, which is the VIX of VIX, start to diverge from what it should be doing as opposed to equities, right? So usually kind of like VIX, equities are down, Vivix is higher, right? Equities are up, Vivix is lower. And a lot of times what you'll see is when some of these rallies get a little too cooked on a short-term basis, you'll see equities trading higher and Vivix trading higher with it. And a lot of times that's an early warning sign of things need to cool off a little bit. Okay? Now again, on a short-term basis, doesn't mean that we need a major correction, right? What happens is a lot of times the longer the divergence, right? The heftier price you got to pay via rinse and correction. Okay, so what we've seen, like we saw recently here, and let me see if I have it on this chart. I don't even know where it started here, but let me try to figure. So the yellow line is Vivix. Okay, and here it is. Okay, so this is what Vivix should do when the S&P rips, right? Here the S&P, which is the white line, rips, and Vivix aggressively sells off, right? So now as the market was still making highs, you had Vivix, and you can see here even more so, what day is this? This is the 5th. It was kind of even more last week. You have Vivix going higher with it. And it's just, again, it's a nice early signal on a short-term basis for you maybe to put the gun back in the holster, wait for some sort of rinse. And what you'll see these two close, right? You see the mouth close, basically. So that you get the gap open, like kind of the jaw opening, and the jaw closes. All right? And what you look from that point now you get a market selling Vivix trades higher. We want to see now Vivix unwind, right? We want to see the opposite. We want to see Vivix unwind while the market hasn't really rallied yet, in a sense. So the more Vivix unwinds, the more momentum we probably see on the upside on a short-term basis. But I think it's a cool signal when you want to participate, but you're worried about a melt up. Now, here's the risk. The risk is the market continues higher and you get Vivix, that divergence last. It's very possible. So where that vol up, equity up, they call it vol up, spot up, right? Equities up and volatility up. But that's a warning signal, right? So you don't want to get too aggressive into that anyway. If the market's going to do that, you almost like you want to spit on it, and anyway, because there's obviously a lot of risk that's coming along with it. Okay, but that's kind of the risk that I wanted to make sure you guys are aware of, that the market can go higher and Vivix go higher with it. I mean, I've seen sometimes for a week, 2 weeks, but then that leads to a pretty nasty rinse. Okay. But in the Steam Room, I'm posting this constantly. For those of you who don't follow it, I have it up on my screen during market hours, and I'm keeping you guys updated in the Steam Room. So if you're in the Steam Room and not too familiar with this, don't worry about it. I keep you posted. Okay. So that was the last kind of tactical thing I wanted to mention to you guys. On a name basis, again, we're seeing kind of what we've been talking about. It's broadened out. It's flow-wise, has been pretty aggressive out there in these speculative names. But you guys know my feeling of that. You know my feeling on that. Can it last? Sure, it can last. But in all likelihood, it's not sustainable. It's not sustainable. Companies with no fundamentals aren't going to lead a new bull market. Okay? It doesn't happen. But you can get these kind of, certainly can lead to last cycle blow off top, right? Certainly. So at the same time, and this is kind of the way we've been painting it, you want to participate, especially as far as trading is concerned, because there's a ton of momentum in these things. But you don't want to fall in love with all of them, and you don't want to get caught holding the bag with decent size in a handful of them. Okay, because it can leave quite the hickey. All right. So yeah, everybody has a different way, a different approach to trying to play these things. There really is no secret sauce. Me, I like to stick and move, so I avoid holding too much weight at once. Right. So if I get caught in a little bit, and I'm giving back some of the profits I made on the last two names that I participated in, but I'm not getting hit over the head. So that's kind of my approach. What I told you, a little different wrinkle I was adding to the mix. If I do like the name, okay, I'll leave a little equity behind. Or you can take some of the profits, buy some leaps, which we talked about, right? So if you like a name, you got a real nice entry in it, but you want to lock in the gains and you want to still be involved, that's a solid approach to take. But my opinion, you want to take those profits off the table because they can vanish. Yeah, it depends on your feeling. If you're willing to, and this is what we talked about, right, the last few weeks, if you're willing to give up those profits because you're almost kind of like investing in the name, right? You're taking a really long-term approach in the name and you're willing to give up short-term profits even though they're decent, then who's to tell you not to do that? But you can't be pissed off when those profits disappear. You can't get frustrated, right? Obviously. So it's kind of like the example I showed you with Soon. I kind of played that way, right? Like this was a hot name, and it wasn't even that I liked the company. It was a $2 AI name at the time, all the way back here. Okay. So I said to myself, if this AI, and this is before really AI really took off, okay? So I said to myself, if AI ever gets hot, right? If the riffraff ever get crazy on AI, I got a little $1.50, $2 jammy here. I made some decent money off the trade. I'm going to leave a little piece of equity. Right? If it gets crazy, it gets crazy. But the reason I left that piece of equity wasn't for a little more upside. It was just in case, people get really excited off of it in the future. So the reason I tell you that, and I bring up this example, look how many times I gave up that profit on that piece. Rip, right back down. Rip, and that was with an unbelievable entry. That was off initial activity with an unbelievable entry. But look how many times it came back down there. Boop, boop, right? And then this, I finally had to sell into that rip, right? But I was willing to give up these shorter term rips, okay? Understanding that if it gives it all back, I can't get pissed off because that was my plan for it, right? If it didn't pan out, it didn't pan out, but that was my approach to it. So I feel like if you're going to take that approach with any of these zero revenue type names, you have to be willing to see those profits vanish. Because when things go bad, even if it's for a short term thing like a month or two correction, they go bidless. Right? They go bidless because they're expensive right from the go. These things based on their fundamentals. And what's really interesting too, I was cracking jokes initially, but now it's like out of control because I noticed it was there. Every single name I see, they all look alike to me, right? I pull up their balance sheet or I pull up their revenue and earnings. They all have the same exact look, right? $1 million or 2 million, if that, in revenue and bleeding losses, all of them. So Again, trading those off momentum, yeah, I'm all for it. You guys know I love that shit. But that's not that's not ideally what we want to be involved in. All right? We want to see real growth stocks, real numbers that's catching some accumulation sweeper activity that based off the growth of their fundamentals, you got a nice trade, you can leave a runner and then get really paid. All right, there's some sustainability to it. So, yeah, I said my piece with it because I don't want to talk anybody out of potentially hitting a home run with these things, But at the same time, I want to make sure I'm telling and explaining to everybody the risk that comes with these things. Nobody looks at fundamentals when you get this type of cycle going on, and then all of a sudden, when fundamentals matter, you got a big problem on your hands. Nobody cares about the story anymore, and that's the reason why I keep bringing that up. That's what we're seeing. A lot of the buying, that's where it's taking place. Okay, that's why institutions they don't have much weight on. They're not buying this shit. They're not buying these zero revenue names. So that's why a lot of these institution long only funds, they're really not putting a lot of weight on, because it's all these sexy stories with all speculative things, nothing tied to the economy type stuff. All right, but yeah, and the action's aggressive. See the other. Let me talk about one more thing there that most of you are aware of, but hold on. Do I have that thing I could show you guys here? Hold on. Oh. Fungal. Hold on a second. I don't know what I did with it. The spots on these things, it helps if they're decent spots on some of these things. Unfortunately, there's really the spots aren't that great because a lot of these are older plays that have had run-ups. And yeah, they're lower than where they topped out the last time, but they're still a lot higher than where they initially bought them. But if you can nail these things at a better spot, I think a few of you had let me think of the name. Hold on. Unusual Machines or some shit like that. What was the symbol? Hold on. Unusual Machines. What could the symbol be on that stock? Anybody remember? Unusual Machines. UMAN. No. Let me type this. Oh, here it is. UMAC. I got it. Here. Okay. Perfect. From the last time we spoke, everything's here. All right. So if you got a little bit of a base here, right, and they're starting to buy it here, and that's where you're looking for an entry, at least it's manageable. You can manage this trade, right? You could say, all right, I don't see momentum or it goes in the wrong direction. I can yank it, pull the plug, and move on. Where if this is here, these things can move 20-30%, and it means nothing. It's just normal trading in it if you're playing them up here. Okay, I think the main risk with some of this stuff here, because of how overheated it got on a short-term basis, is that this thing can run to here and it can get hit with a secondary news, an offering. You understand? And if you don't take that profit, bloop, I'll pull one of those jammies. Yeah, not the end of the world, but there's a higher probability of that right now. There's a higher probability. But I certainly like this setup. As you know, one of you guys brought it up to me last week off the flow. Or last Thursday, I think it was. I like this setup here much better than, some of these other names that you kind of have to chase. And listen, if you have to chase, you size down. You do what you got to do. I don't want to sound like Mr. Conservative here. You understand? I like to roll the dice too. I just don't want to see people get too lumped up in this crap. This is crap. Okay? This is all crap. Dog shit crap. All of it. I want to make that point, okay? That's all. Have fun, make some money, lose some money. That's all fine. Maybe you get lucky, you catch a nice ticket. That's what it's all about. Do not get lumped up playing these things. Okay? I should have all that gibberish I told you. I could have saved a lot of breath here. That's the main point I'm making. All right? You should, and you don't hear this from many players in this game. Okay, especially that have been in the game. But luck, you should allow luck to be the reason why you get paid in these type of stocks. Okay? It should be luck that gets you paid, not that you sized into it based on the story and you heard this on CNBC and the stock's running right now, so I'm taking a big shot. Or it's catching flow, it's up double, but it's still catching flow. I'm buying the shit out of it. You should be like, oh, you know what? I bought a little of this, I got lucky, and I cashed a big ticket. There's nothing wrong with that approach with these things. Okay? So yeah, T10, I think T10 I own. T10's down here, right? Earnings? Yeah, T10 101. So T10 is a name. I own this name. And I didn't sell this run up, and I'm still in it. So T10, what do I have? 900 shares, right? 900 shares I think I have. That I bought back here somewhere. I don't remember where I bought it. Somewhere over here. So T10 is one of those names I've tucked away. But yeah, these are the names that you want to find a nice entry and tuck away. Okay? The other ones, yes, and Sahil made a great point on one of you pick one or two, you buy a little of, you tuck it away of these little speculative names. That's the way you do it. Don't try to get rich off them. I understand the draw. Trust me, I get it. You can make money quick, they move big, but they're dangerous when they already are hatching all over the place. But yeah, T10, this is what we want more of. So yeah, T10, and here you get sweeper activity in T10 on the dip is definitely one you want to look at. You know? Anybody have any new names or anything? Even speculative names? Don't be after my little rant. Anything worth an interest of taking a peek at? I mean, let me tell you guys, there's a lot of action in these spec stocks. A lot. I don't know where it's all coming from, but you got, hold on one second. Let me just fix this out over here. I don't even know what the hell I do with it. You got a lot of action in these spec names. I'll talk about some of them that look a little more interesting than in some of the others. VG, that's been a nice one. That's a nat gas play that had a real nice drawdown from the IPO or spinoff, right, CEO? But this was nice down here. And this is a spinoff or an IPO, but this is legit, right? This is a legit name. Anything new on? Well, you have earnings, Luis. You got earnings. I don't know. Are they out yet? When earnings? Tomorrow? Today? So, I don't. You can't really. There's nothing here to be said on RBRK. This is just silly now. This is just silly. Listen. I'm not going to tell anybody to buy this RBRK up here. No way in hell. As much as I like it, I couldn't do that to my worst enemy. RKLB, I bought a little today. Is it moving after hours? I saw the other one moving. Oh, you got a little pop there, right? I bought some RKLB today. The ones I bought recently, again, little bits and pieces. I'm not going nuts, all right? But I bought RKLB today. One I bought yesterday was I get the symbol screwed up every time. ASPI. ASPI. And I played this name a few times, and I'm a little late here. But again, I didn't take crazy size. So just because of the flow is more, it looks more real of real buying in the flow than some of the others. And, $8 stock, I figured I'd take a shot. This ASPI. ASPI. They do nukes. I think nuclear. So this has seen nice action. Again, the stock has doubled here. 4 to 8. But ironically, it was in the middle of the correction where this thing caught nice action. Let me see what they go. I'll pull it up here so I can show you guys. ASPI. So here's some of the action recently here. Repeat activity, June 9s, that was small. Where's, we've been talking about this name for a bit. RSI owns ASPI. He's got a nice entry there. Here, so you got these July 10s. Okay. Really nice size. All right. So you got 440,000 bananas there. Here's the order right here. July 10s, when the stock right around here, 8.5. And then prior to that, right, so this is some of the action like they usually catch. Little sweeps. Where's another one? There was another really nice looking bet here. Repeat July. Oh, there was more Julys here. Here, look. This is at $4. This was the order I was talking about. July 5s. March 7th. So look where this order came in on ASPI. Right over here. So you see the problem? Okay. I like the action in this name. I truly do. I think there's real buying in this name compared to some of the other spec names we've been seeing. But, now this stock is up 100% from that real bet in early March. That's the problem, guys. That's the problem on a lot of these things. That's the problem. Cores, again, nothing new, but catching a lot of flow. Cores, this thing's been seeing a lot of flow from back here. All right? You guys remember it. I was kicking myself in the rear end for not getting involved in the back end off that action. But yeah, there's a lot of buying. There's put selling. You gotta, here now, right? It's $12. You understand? You could have bought it at 11, 10, 9, 8, 7, 6, 5. It's been catching nice action throughout. I think Ranchero took a shot with it. You guys know in the steam room, he owns it cheaper. So that's kind of the problem I have with a lot of these names. You can't like it as much from $6, $7, and now it's 11, and you like it the same. If you're in it, I wouldn't sell it. If that's what you're asking, I wouldn't sell it. But if you're going to buy it here now, I would definitely size down because you're chasing. You're chasing. You're not early here anymore. You're not early. Again, spot-wise, right? We're talking spot-wise. RCAT, that's seen flow recently. Again, very similar. I think the same person who brought up the universal machines brought up RCAT. Here you had a decent spot. Just be careful how much you chase. Today down to 730, so not as bad. But I throw all these things. The majority of these things I throw all in the same basket, guys. I think they all they're all going to move together. You understand? They're all going to move together. I don't think these things necessarily. Let me put it this way: the majority of these names are going to move in a pack. You understand? There's not really stock picking going on here. They're playing a basket of these names. Let me think of some of the other hot names. Oh God, this thing. Did any of you guys catch this? Yeah, I saw that, Struck. Any of you guys catch this? APLD? That was a nice explosion. This is down. Did they do a secondary? Probably. I don't see. Oh no. By the dip. What happened here? I can't see the news. This thing's down. Looks like they might have done the secondary APLD. Maybe not. But this one caught a ton of flow. A ton of flow. But here now, forget about it. Forget it. What else? What other names you got? No secondary. Why is it down, Madden? Is that a real trade, or is that just fugazi trading? APLD saw a little rolling today. I thought they rolled yesterday, Madden, but when I pulled up open interest today, the changes in the morning, they didn't roll too much, just a little. I thought it was mostly rolling yesterday. But they probably buy this dip. I don't know what the news is, though, Very nice, Stace. Circle, that's the IPO today, right, Sahil? I was out when they came public here. Oh, we finally got an IPO, huh? One IPO we can all stare at. Yeah, I mean, Madden, if you're in this with a cushion, I would probably hold on to it. Again, I don't want to tell you what to do, but I just think it had a hell of a move. Hell of a off that news. So this was the IPO today. Circle had a huge move initially. We'll see once it starts trading options. So let me give you a couple losers I had. Right, I don't want to seem like I'm all talking about winners in this crap, and I don't take losses because I definitely get the shaft in some of this crap. Here's one I got shafted in on a secondary news. Galaxy. Wait a second. This is the stock? Oh, yeah. Why does that look like that? Oh, they adjusted the chart. Now I can see. Okay? All right. Now we can see where we got shafted on Galaxy. All right? So here's the story. Look at this. Galaxy, we thought it was an IPO. Well, at least I did. I don't know if any of you guys, I was spreading fake news. So Galaxy came over from the Toronto. So we didn't see any of this. We just saw it 3 days of trading. Okay? And then it started trading options already. And they were sweeping it. So I'm like, wait a second here. You got an IPO already, a couple of days trading options, and they're sweeping it already? I got to buy a little bit at least. So I bought some of it. Okay? Everything was fine. The stock actually went green after I bought it that day, the next day. And then they do a secondary. And I'm saying to myself, wait. How does an IPO, how do they do a secondary in 2 days after they go public? And they're not an IPO. It came over from the Toronto Stock Exchange. Okay? So now I feel like a sucker. Okay? Now I bought Galaxy there. After me preaching to you guys nonstop to never chase a move like that, that was my entry in Galaxy right here. Without even knowing it. Without even knowing that this went on. Okay? So there I'm losing money. What's another one? Earlier this week I bought and sold one of the little ones. I was up on it that day. I should have took it that day, and then the next day gave it right back. I forgot what the hell it was. Anyway, they're not all, especially now at some of these spots. It's not all easy money. Here's one. that is interesting, but a little bit stretched. AMSC. So this is more of a real name. Okay, AI related, and they got numbers, I think, right? Yeah, not big, but they're profitable slightly. So this name caught some action back here at a big run. Then it had this consolidation, had another pop, and then obviously the correction early in the year, and now it's probably going to test highs. I don't know what you do with this here, though. I don't know what you do. You understand? Like, I like it. It looks really good. But you guys know I'm just bad with this, like this move like this. Run through a niner. You got a lot of names like this. But it's the market we're in right now. So I'm just sharing with you some real names um, that have been seeing action. AMSC. What's another one? Let me see. Oh, I know a lot of you played this name. NBIS. You guys cashed. This is some ticket you guys cashed on here. Oh, what is all this shit? Hold on, so we can see what the hell it did. So you had to rip, a little bit of digestion here, and then another pop. This name is being mentioned all over the place. I see it all over the place now. When you guys mentioned it to me, I never heard of it. It's the old Yandex, I think, right? But I wasn't even familiar with it. Now I see it all over the place. What's another name? Let me think. Any real names? I don't know. You guys have any real names? Any names that pique your interest? Stacy, you have anything you're looking at? Bigger names. CSX on the cyclical side. Probably gets stalls out here a little bit. But something to keep an eye on if you like it, because you may break a downtrend here in these things. What else was there? Real names. Let me think. Oh, this was one that had caught some nice action. Etsy. That had some rip. Etsy had nice action. Papu, Riot, and Mara. Honestly, I think they're all in the same category. Riot and Mara seeing flow. They're both seeing action. They usually do. They're pretty active. Mara even more. But you got I think top action wise, you got the couple names, the same ones that we've seen in the past. The cores, the what's the other one? Bit Deer, and there's one more. What's the other one? Cores, Bit Deer. Oh, Wolf has been seeing a little action of late. WULF. But let me ask you a question: if Bitcoin sells, these things are gonna be under pressure, aren't they? What do you guys think? So now, you kind of got to watch Bitcoin with these things. That's kind of the problem with these things all the time. KView, that's another name I'm losing some money on. Here, Andrew, I mentioned in the steam room, you got to be prepared. Like here, if you're going to add to it, okay, and the stock really isn't down. The options from where I paid, I'm down on, but the stock is kind of where it's been, where they buy it. So not that they need to buy it here because it got hit. But I think if you're looking to add to it off all the flow that's come in my opinion, you got to be willing to sit in what may be a boring name. And the way I look at it is you're playing for news. Now, not everybody may look at it that way. Some people may like the company, for whatever reason, they make Tylenol. The flow, in my opinion, the flow all stems from those activist Sharpies taking a position in the name. Plain and simple. Right? So you like that type of flow you're getting involved in for some sort of news. Some sort of news. Now they're buying with time, Novembers, they hit pretty hard. So you got the time if you have the patience. It's just without the news, it's sexy. I guess is the best way to put it. It's not a growth name, in a hot sector. Like they make Tylenol. I think the excitement around it with the flow is that, what is it? You got Third Point, you got a few of those funds now have taken a stake. And if you're looking, I sound like Kramer here, but if you're looking to diversify a bit, this name should hold up better in bearish tape because it's somewhat defensive. If these healthcare names start acting better, you probably do well in this. It's different than what we're seeing now. Again, you can see a market trade higher, especially when it's solely tech and AI names, and this thing do nothing. So what else? You know what else I did? I wanted to talk about again. Nothing major yet. But I had to do it just because of the way the market is. I bought some Soxel earlier this week. Okay, I want to add to Soxel. Right, so Soxel, I kind of wanted to do this. If you remember, a while back, so you probably remember. So I figured I'd take some action and start the process now at least. Okay. I'm buying Soxel a bet on not just the semis or AI or anything like that, but even more so, in my opinion, if these cyclicals end up participating, if these tariffs come to an end, and this market ends up turning into the start of a new bull market type of thing. All right. So, like, for me, I got to take action early because once they start, if they get hot, I'm always like, I'm not chasing. So I never get involved in them. So I bought some Soxel and I'm looking to add to the Soxel. So and because of the lack of names, this is what I'm going to do. I'm looking to do it with TNA as well. Right? See, because I can't. The names, I'm kind of content with just trading a lot of these speculative names and not getting too crazy. Unless I see one I really, really like. Right? If I see, $8-10 stock that's got maybe some fundamentals to it at a nice spot, that's a different story. But the majority of these names now, I'm just content doing what I'm doing with them. But at the same time, I want to start positioning for if we don't melt up, I want to eventually have some decent weight on. Now usually that process for me starts with names. I start buying names with time, but because of the lack of new names, real names, I haven't done any of that. So I gotta take action. I can't wait any longer. And if you remember, I mentioned I was going to do that if we weren't going to see, if we weren't going to see those new names prop up. That's something I'm more inclined to do. I didn't do it in 2023, and I was caught kind of light-handed. So the goal is to have some Soxel exposure and some TNA exposure. And the more entry opportunities I get to add, the merrier. And that's the way I'm kind of taking that approach there. I traded, Stace. I don't have any now. I didn't hold any, but it caught a lot of action. Those Jan calls, they tattooed those Jan calls. So, again, just a lot of these names, man. A lot of action in these names. A lot of action. But yeah. So a lot of action in the name. I traded it, but I don't own any now. I flipped it. Yeah. Now, Soxel, so you guys know, is the levered ETF for the semis. Now, this is not something you usually buy for overnight exposure. Okay? The main reason for it, the reason it trades, is for intraday leverage. Okay? But if you get a market that, one, melts up, or two, kind of hangs in there and then a new bull trend forms, you can make a nice bang for your buck here, right? What you don't want to do is hold Soxel on the way down, right? So if Soxel kicks it in reverse, right, and is breaking lows, you don't want to continue to hold this thing because it goes down, consecutive days. It's going to go down triple and then triple that and triple down. It gets magnified. So once in a while, I did it. If you guys remember, I did it with the miners. Remember, I played the Nugget and JNUG. I did it with those instead of buying the names in the miners because I couldn't pick which one to buy. This one is the best, but I don't want to chase it. I kind of just bought Nugget and JNUG, back here. And again, longer term. It was a longer term trade. Unfortunately, I don't have any of it now. That would be great, but I had Nugget in the JNUG. So same thesis, same plan. Look at JNUG. Oh my God, Sahil, do you see JNUG? $88. Oh my God. Oh my God, I'm sick. Yes, Papu. We've seen a decent amount of flow in this. That's the silver junior miners, right? We've seen a good amount of action in this. Silver junior miners. So those of you playing silver, again, now it's obviously post pop today, but here has been the best flow in the silver names. Puff Puff Pass, as we call it, PAAS. AG, that's been really active. The best one, I don't think it's silver, it's gold. SBSW? No. Yeah. This one. I don't know why. I have no idea. But this SBSW has seen some good looking flow over the last few weeks. But yeah, they've been. Newmont Mining has seen some nice buying. NEM. HL. A lot of miners. How long ago did I own the miners? I mean, I held them a long time, though. That was a long time for me. So, oh my God, this is where I sold? Oh, so that's ages ago now. So here's where I bought the miners 2024. So it's, oh my God, it's well over a year. I thought it was like a year. Well over a year. So I can't be angry now. But look what I avoided now, right? So this is what this game, see, this is what I was telling you. Like, you can't beat yourself up on, I should have held, I should have. I sold here. When the correction came, I was like, oh, what a great move that was. And now, look where it is. Like depending on when you ask the question, whether it was a good move or not, the answer will differ. So anyway, the moral of the story is I want to try to get my hands on a decent chunk of Soxel and TNA. That's the goal. Okay, and you know what else too, guys? I don't know if this applies to you guys too when you're playing this game. When I do that, like let's say I buy some Soxel, I buy some TNA. Now I don't get as much FOMO or frustrated in individual names. So you understand? So like if I'm not seeing anything that really is that appetizing in regards to individual names, I'm okay with it. I don't get because usually I'll get frustrated. You know, I'll just I'll day trade. I'll do my thing. Right? Try to keep my losses to a minimum. Look to get lucky on one of the few. Like I'm content with that. I'm totally content with that. Yeah, and that's kind of we've been talking about this TNA for a while, but now for where the market is in this setup here, I think risk reward wise, both of them, Soxel and TNA, it's as good as you're going to get, right? On a risk reward basis compared to anything else. Like look like gold, where gold is, where Bitcoin is, where if you get and this is the kicker. Like this is where I think we have to lean bullish, continue to lean bullish into weakness. Okay? Because and we talked about it the last couple of weeks. If by whatever way something flips positive on the macro side and then starts to spill over into sentiment, confidence, and all that shimmerbang, right? You got like small caps that haven't participated not one lick. Right? The semis have been dead money for quite a while now. So you get that risk appetite start to spur up in the institutional space, and they're going to come after those two aggressively. Aggressively. TNA, yeah, I mean, the small caps, there's no more words for me to, it's just been dreadful. It's been dreadful. It's just been dreadful. So, you wanna start, at least the way I look at it, you want to start with either calls or a small piece of the equity. Calls with time are probably the better way to go to start. So this way you can take on some water if you're early, because you have to expect to be early. If you're not, fantastic. But this has been one of the toughest trades out there, and have the ability to add as things are looking more constructive. Now, again, the big kicker for the small caps more than likely will be the Fed. Will be the Fed. So that's kind of my game plan here. Yeah, exactly. Expect that it might take time, and if it takes less time, good for you. You know, but anticipate that it's going to take time. Try to piece in little by little, right? You buy some, then you get some bullish short-term sentiment signals off a pullback. You want to add a little more. You understand? Build a little nest egg, and the more constructive things start to look, right, the more you try to add on dips and pieces. But we're so short-term focused for obvious reasons, but we're too short-term focused a lot in this game, where sometimes you want to do a little of both. You want to do a little of both. I think where the danger eventually comes is where that some of the stuff that's working shorter term, you end up falling too in love with. You get too heavy there where you're not early, you're kind of more late than anything else, and you get stuck in the wrong shit. MP caught some action. Somebody in the steam room, I don't know if they're still in it, but a lot of flow in this name, Papu. A lot of flow. Now, I think it's related to the China, what are they called again? Minerals? What do they call these things? I'm drawing a blank here, post 4 o'clock. What's that shit called? Specialty material? No. Well, I can't think of it. But anyway, the whole China tariff agreement stuff. And also Ukraine, it was a topic of conversation. Rare earth, right? Rare earth minerals or whatever they're called. But anyway, a ton of action. Let me see. I'll pull it up for you. I think it was July calls. Maybe puts. No, that was, when was this? Oh, this is when it was up for. Wait, before that. Here it is. May calls. Nope. That was into the breakout. I don't know where that. I can't just search. I think they were July calls. Where's I responded to GJT with it. Where the hell is it? Is this it? No, that's not it. What's the date on here? Wednesday, April 16th. Not that long ago. It was recently. Here, this. July, I'm right. July 25s. July 25s. That was just recently here. The stock was 22, and that was the day before. So it was around $20. So you had a little pop here now recently. Wow. Yeah. But yeah, Papu, they've been buying this. Rare earth, right? I couldn't think of it. I drew a blank post 4 o'clock. I know, I remember this name though. This was a SPAC. I remember this name. This was hot back in the day too. Look. I remember this name, MP. And this is profitable, I think. Oh, not anymore. Not anymore. What about anybody? Some of you guys introduced me to some decent growth stocks that maybe didn't catch flow yet or caught a little nibbling. Any of those type of names that I like you guys know the names, type of names I like. Anything that has caught your eyeballs? Any names like that, guys? REMX, that's the ETF for rare earth. Yeah, that's the ETF. Any hot growth names? CTA buying over the next month, something high. Good call. You got favorable CTA buying in small caps that should at least keep it bid anyway. Should keep it bid. Again, barring any catalyst that rocks the boat. Like, listen, a lot of these things have been nothing burger, but you have a job number tomorrow, okay? If that job number shits the bed, you're probably going to get a decent sell. Like, if you want upside tomorrow, you want a solid job number, I think. You don't, even though it brings Fed rate cut, you do not want a weak job number. Because what happens is you're going to have the street think the Fed is way behind the curve again. Now, I think whatever sell-off it creates eventually will become a great opportunity, right? But that may not happen in a day. So this is what Goldman's looking for NFP-wise. All right, so you see if the job market cracks a bit, they're looking for some downside. But any strength, you should get a positive reaction to it. INOD, good call, Madden. I think T likes this name too. This is an interesting name. This is an interesting name. We've seen some flow in this name. Profitable, sexy subsector, right? You had, this is kind of what it needed to do, right? If you were looking for a re-entry in it. But yeah, that's not a bad name. I nod. Again, up a lot. It's up a lot over the last couple of years, but compared to some of the other stuff we're seeing right now, really interesting. Yeah, Peyton, it's when you get a market that does this, like it doesn't get easier here. It doesn't get easier. But that's a great point, Peyton. That's why I'm staying really light and playing and mostly spec names. What I would like, ideally, what I would want to see is something a little like that. Something like that. Nothing major, but maybe they sneak in a little weakness. What I'm worried about, what I'm worried about is this. Ooh, what happened to my mouse? It went dead. That's what I'm worried about. That's what I'm worried about. Because with no new names setting up, I feel like I'm in chase mode for everything. I hate that feeling. And I really, I know I'm not going to make a big dent playing it that way. I'm going to participate and I'm likely going to make some money, but I'm not going to make a big dent. And for somebody who was in a really high cash position for the whole correction, that's very frustrating. That's very frustrating. Joel, ASTS saw some, it was really active today, mostly weeklies. Overall, the better flow has been in RKLB. Hands down. Like if you ask me, Joel, what name in that group sees the best sweeper activity, it's RKLB, and there's not even a close second. They've absolutely tattooed this name from here and haven't stopped. Okay? Sahil and I, and probably Matt, and I'm sure a lot of people in the room, we owned it there and sold it here and watched this do this. Okay? And I'm kid you not, this thing catches flow constantly. So again, ASTS, there's some flow there, but if you're asking me flow wise, RKLB catches the better flow. But ASTS, let me show you what they were playing today because it was active. Right. And cried the whole way up. Exactly, man. Here. So today, wait a second. What's wrong? I got to tell Joe about this. Today's not May 14th. Oh, I got to scroll up. That's what happens. Here it is. This is the action today, Joe. 18,000 weekly 30s. That's decent volume. June 50s. Weekly 31, weekly 29, weekly 30s, June 28th. Quite a few different lines were active. That was the action today. See? June 50s, lottos they're buying. And RKLB, they were buying late today as well. We're into the weakness. Yeah. Next week, 29s led the way. Weeklies, July 30s. Yeah, the difference is like ASTS, they play short term in short term calls, playing the momentum. RKLB catches real positioning. Again, I have no idea why. I don't know the difference between them. They all look the same to me. But the RKLB flow is psychotic. Every dip, psychotic. Jay, we need not good NFP tomorrow. Yeah, so a soft NFP, and you think we get a decent sell tomorrow, CEO? I mean, too soft, you could get I think you could get a real big sell. Now, eventually you may find some buying, but you could probably get an exaggerated sell off if you get a big miss. You know what the problem is? If it misses, if you get a low number, you'll get aggressive selling initially, but then you're going to start to hear, oh, maybe it was a one-time thing. It's going to get adjusted. It's this and that, right? Because it's just one number. Let's wait for the next number. So they kind of come in and buy any heavy weakness at that point. But I think the fear is going to be the Fed is caught again. And if you're chasing long, that's going to put a stop to anybody chasing long. Because you're going to be concerned with how late is the Fed again. Now, if that happens, I think you could definitely see a correction here. Right? My opinion, unless we're going into a legitimate recession, I don't think we go and break new lows. But if the job market cracks hard, you can get some decent sell-off here, is my feeling. But I don't think it's the worst thing in the world, because if you avoid a recession here, okay, and you get that healthy cleansing like that and get the Fed back on track, you have the ingredients for a new bull market, in my opinion. You have the ingredients for the potential of a new bull market, and believe it or not, that has some lasting power, right? Because all the signs right now that we're seeing is late cycle. The only thing that looks early cycle is in my opinion, positioning and sentiment. Everything else looks late cycle. The flow looks late cycle, right? All that shit looks late cycle. So I think if you get a little bit of a crack and you get the Fed involved, right? And now you got the setup where now you get institutions betting on improvement on the macro end in the future. So they look past the little slowdown here. You got the Fed, and now they buy cyclicals. Now they buy small caps. You understand? You'll get that full participation. And we can see the characteristics of a real bull market. Like, you guys may think I'm nuts. The market's been bullish, yes, but it really hasn't been a true bull market. It really hasn't. It's been a bull market in certain sectors. But overall, it hasn't been a real bull market. Right? So to get those real bull market characteristics and participation, I think that ultimately that's what's got to happen. Right? It's been really weird. Like, even this, you had the bottom, a low put in, and usually, right, we talked about this. You get that low, but the low into the fear is created by the Fed pivot. Right? 2008, 2018, 2008 too, but 2020, right? You get that type of setup. Low, the future looks awful, but you got a huge pivot from the Fed, and now institutions look past the awful because of the Fed pivot. That didn't happen here at all. Right? We got a low, and right, nothing appeared early cycle. It's basically the same groups, the same names that have led here. That's late cycle stuff. Now, late cycle sounds a lot more bearish than it is. 1999 was late cycle, but 1999 was a huge run, right? So late cycle can be a blow off top and can be a crazy move. That's why I think if you get a late cycle melt up, you can get SPX 7000 by the end of the year. But my opinion, we're donezo after that. My opinion. Ideally, what you want to see is now we kind of get stuck here. The macro, the economy, the economic data starts to deteriorate a little bit. Boom, you get the Fed involved, and now you get that full participation breakout to new highs. And I think you got the ingredients there for, a multi-year bull run. I know that's not consensus right now, but that's how it usually sets up. That's how it usually sets up. But we don't want to predict it, right? Because it's impossible to predict. It's impossible. So you don't want to try to predict that. You don't want to try to predict it from happening. You kind of want to watch how it develops and then react. Right? So if it looks late cycle, what you want to do is you want to stay more tactical. You want to stick and move, have a few names you like, give them a little longer leash, but, be of mind that this, when it runs out, we got a problem. Right? So it's kind of, you're playing musical chairs, make sure you have a chair at the end. If it's early cycle, full participation, that's where you want to buy shit with time and hold. So you're seeing new breakouts. You're seeing new small caps break out, new mid caps break out, new cyclicals break out, right? You want to buy those with time and hold and roll. And that's the ideal way to approach it. Yeah, well, that's the thing. You can't, the melt up. See, the only way the Fed's going to cut the heel is if you get the economic data to crack enough, right? You got to, and to get that, you're probably going to get some market weakness with it. You're going to get some market weakness with it. So I think for a healthy move to the 7,000, it would probably look like something like this, right? We've seen it in past cycles, right? Instead of, and look, we've done that plenty of times, right? Look, right? You don't want that, in my opinion, to 7,000 now, because that's going to resemble late stage blow off, right? Especially if there's not full participation and shit. So yes, JW, yeah, exactly. That would be ideal. Again, 2022 is a great blueprint, for kind of a ideal setup here, right? Here's the 2022 JW, to your point, right? You had multiple rallies in 2022 off that floor, okay? But net, right? When it was all said and done, look, this was the rally, and then look at this. This is kind of what I'm referring to. That set off the bull move here. This is where the Fed pivot came in. The true Fed pivot. right there. Shot out of a cannon. Prior to that, we were kind of seeing what we're seeing right now. A little more speculative now than back then, because back then you really didn't have too many spec names. Then it was just Mag 7, if you remember, carrying everything. But this little breather, right, which never tested lows, but kind of normal digestion off a nice rip, end up setting up the real move. And that's where you got better participation. The semis broke out, right? You started to see new AI pockets. So it looked a little better, even though it's still tech-oriented. But to JW's point, if you get like just digestion here through the summer, that would be ideal if you ask me. That would be ideal. Again, depending on what you're looking for, I say ideal. You might want to melt up here, right? You may own these spec names right now at lower levels, and you got cushion, and you're letting them run. I mean, why wouldn't you not want to melt up here? Let them keep going. Let them go parabolic, and then you sell them, right? Who cares? Right? Let them blow off like the SPACs did and the meme stocks did. They went bananas before they got killed. So it all depends, on how you're positioned and how you approach it. But I'm talking about like the health of the overall market. It's all about like participation, right? Like we haven't had we had little pockets of participation in this quote unquote bull market that we've been in. You haven't had broad participation. And the reason why is because anything tied to the global economy, nobody wants to own. Right? The Fed was tightening, right? Everything, the global economy was slowing, then tariffs come in. So the way that you usually look past that is if the Fed now is starting to cut rates, starting to ease, then you're going to have institutions look past this rough patch because they know 6-9 months, a year from now, they're going to get paid. Right? And here's another thing, too. Like, you see these guys? Okay? I mean, they usually lead, right? In a true bull market or bull move. Like even out of 2022, they were the leaders. Look at this. Like that, the housing market looks like it's in shambles right now. In shambles. So, again, it's just a different type of market. But I think the main takeaway is you want to look for this stuff. You want to look for signs of this stuff and be ready to react as you're seeing it. Once you're seeing proof of it, you start to react, have a plan in place, and start to react to it. Right? You could roll the dice and make a bet on how this may play out, but just you got to understand it's really difficult. The smartest minds in the world can't. You see their macro calls; they're awful. They're awful, and the good thing is the smarter minds out there, they manage money and they run funds, and they're pretty cautious right now. They're pretty cautious right now. So again, I think the best way to put it is positioning and sentiment resembles early cycle, but the macro, all that stuff, and the price action has resembled late cycle. So they're going to line up eventually, right? Either you get a melt up and then positioning goes all the way to the other side of the boat and then everything's late cycle, or you get a little breather here, right? Whether it's 3-month chop, range bound, or a little correction here over the next 3 months, and now you got everything lined up for the start of a move. But it'll be interesting to see how it all shakes out. But yeah, who's able to predict these things? You can't. Yeah, I mean, you can't. You just feel it's craziness. That's that's the problem with like Tesla now. It's not Tesla anymore. It's Elon Musk Inc. and political. It's become like a political stock. You know, liberals aren't buying it. Liberals are calling for a crash. They're spreading bad news on it. You got what's his face holding a Tesla chart down on stage. The senator, congressman. I mean, it's insane. That's what happens with these names when they get too crowded. So eventually, again, when this will blow over, whatever weakness it brings with it, people that have a bad taste in their mouth in Tesla will get to an extreme, and then the opportunity will be on the long side. But when when it's the topic of conversation, it's a disaster. Everybody I know talks about Tesla. Tells you the guy who fills up my gas tank talks about Tesla. Like, it's insane. So, but that's the market for you. Just it happens to be Tesla now. But it's insane what's going on with Musk and Trump right now. Insane. You can't make it up. We're living through crazy times, my friends. Crazy times. All right, boys and girls. I'll let you guys run. All right. Hopefully, I didn't add any more confusion to what's already confusing times out there. But again, I just think right now, the speculative names are the ones that have momentum. We want to participate nice and easy. If we get lucky, we make a little hit here and there. But I think ultimately, we're looking for evidence of what really is going to come out of this. All right. And that's kind of what we're trying to pay attention to here. Big picture wise, we still have a good setup. And if we get a little breather, I think it becomes even better. We'll see with the job number tomorrow if it's the start of anything or just another nothing burger. But we'll see tomorrow morning at 8:30. Yep. Sahil, good night, Papu, Matt, and everybody, guys. I love you guys. I'll talk to you later. Thanks for stopping by. And I'll see the majority of you guys mañana. Have a good night, everybody.